Hey everyone, good evening to you traders. This is Mark. Hope you had a great trading day today. Listen, what's the difference between a breakout and a fake out? Now we know technically the obvious thing is this. There's our imaginary resistance level. We push up, we hold, well off we go. That's a breakout. A fake out, we push up, we test, we come straight back in. Two things that if we can master as traders, they're going to make us very profitable. These are great things to really focus your energy on, regardless of what market you trade, because markets test key levels. That is what trading is all about. It's about probing highs, probing lows, probing resistance, probing support, and doing something from that. And if we can pick up clues as to whether the market's going to do this or going to do that, then we can immediately give ourselves an edge. Instead of it, if you imagine it's 50-50 at this point, if we start adding clues that give us an idea that it's going to fake out or break out, then we can start to really develop a good trading edge. Two examples today, fantastic examples, two different markets. One was the DAX, one was Alibaba. So two completely different things, but let's look at the clues and let's look exactly how we could tell. We can never tell, that's the wrong word to use, how we could guess in a better manner as traders. It's never black and white, but how we could swing the odds in our favor is probably what the words I'm looking for. So on a daily chart, we've got a great uptrend on the DAX. Yeah, we can't deny that. It's come back from the Brexit lows. It's pushed up. It's taken out this resistance level at the highs. It's bull flagged. It's pulled back a little bit over summer, and now it's started to break out. Admittedly, this is not the most bullish chart in the world, but I don't think anyone can argue that that is not an uptrend. And yes, we are clustering above some resistance levels here, but until that rolls, you've kind of got to look at it as a bullish chart. Let's dial down to a bit of a medium-term time frame, or a medium-term in my eyes anyway. We've got a 15-minute chart. Now, if you look at a 15-minute chart, we've had 2 or 3 days of bullish behavior. Oh, take the pen off. Let's see where we are. So let's look where we are before we tested this level today. We've got a couple of days of solid move. We've broken through lows. We retested the lows, and then we had a good solid uptrend day. Gap up in the morning, and a little bit of retracement as expected. Came back to test this solid 70 level, which we'd drawn on from a while ago. Held nicely, pushed back up, although it closed in the lower third. That's a reasonably bullish close considering it's not far off where it was the day before after that big bullish run. So that's a pretty bullish chart. So fast forward to today, and let's have a look at 1 minute charts. We can zoom right in what we've got. 9 o'clock this morning, I'm watching this DAX and thinking, you know what, this is suddenly picking up a bit of pace here. What's going on? Got my lines drawn in, and we start to test this really key 70 level. We blast straight through it, big volume, big move, and that's going to suck in a lot of traders. Now, if you go back a couple of videos ago, you'll see that I actually was the one who got sucked into the US dollar yen trade. Uncharacteristically, I say, but it happens from time to time with the same type of move. But if you look at the evidence and you're looking at it clinically and coolly, at the end of the day, this is pushing back up. It's 2 minutes. It spends less than 2 minutes under that level before it comes back up. Then it starts to hold at the highs. I mean, this is the point now where you go, okay, daily trend, 15 minute, everything's looking okay, a quick test, comes straight back up, holds above, buyers seeing that as value, right, I'm going to take a long here. But the best thing, the most exciting thing for me is you can quantify the risk reward. There's your risk reward. Your risk has got to be down here below the lows or stop, and your long is going to be there. You're talking 14, 15 points. That is not a lot. And if you're targeting highs, then the risk reward ratio works as well. So not only have you got a higher probability trade because you've got all the evidence that's suggesting that this is a fake out, but you also have the risk reward that I know is so important to get those high quality trades. So let's have a look now at Baba. Completely different market, completely different situation, but let's review as we did with the DAX. So the first things first is we've got a daily uptrend. No one can deny that that's a bullish chart. We've come from the lows of 60, we're pushed up and we're kissing on this 100 level. Big move. Medium term, we've sort of consolidated, whatever. That is a bullish chart. Look at a 15 minute, this is even more bullish than the DAX. 5, 6, 7 days of just pure push. And let's not forget, let's just go back to the daily very quickly. We didn't fill this gap, so the gap is there and we didn't even get anywhere near it. We sort of retested, not even retest the lows of the day of earnings, and we didn't get anywhere near this gap and started to push back up, broke through. So there's a lot of bullish stuff going on there, but we're pushing against this 100 level, psychological level. It's just above the prior high. It's a big number, triple digits, all the things, all the connotations that go with that. What are we going to do when we see it testing that? Well, you know what? This already, I hope you can see, this is a complete different picture to the DAX. It's breaking, it's moving, it's testing in the direction of not only the daily trend, but the 15-minute trend and the short-term trend. That's a lot different to the DAX, which has gone above and is testing from above a position of strength. That's a lot of difference, and that's the first thing we've got to look at. But the second thing is this. Let's look, and tape reading to me is about not necessarily reading really on the time and sales and the market depth, which is part of it, but it's understanding how price responds to a key level and how price behaves at or around a big move. So we get the gap up, big gap, straight away, open, push, aggressive, no real test to lows. First minute held, third minute new highs, fourth, fifth minute new highs. We're straight through that 100, we're not even looking back, and we're just blasted straight off. Now look at this, I've put a quadrant on here to give a clue as to, or see if there's a guide as to how strong this is. This is holding in the upper quadrant of that move. So it's just flagging, holding tight, really tight, hugging that top. And here, and then we just start to go again, retest, and we're just off, and we just blitz up to the stratosphere from that breakout. Very bullish chart. Look at that and see the difference between how that responds to that breakout. Not only does it break out, but it holds high above it. So I just want to explain this buy zone here, and I put it in about here, so I hadn't bought it about this point here. I was looking for a buy here. Now, why was I looking for a buy here? Now, you know what? If you bought the breakout on that, I would say great trade, and I definitely think that's a fantastic trade, even if you do get stopped out, because everything is on your side. There's loads of bullish reasons to buy that. Everything is ticking all the boxes. But the issue is, if you buy this breakout here, you have then got to have a stop under this buy zone. You can't have it here because you're going to buy here anyway, so why would you be being stopped out at a place you're going to buy? So you've got to have it at around this sort of level, under the 50% of the first 15-minute move, about this sort of level. So this is why I was so strict. I generally am so strict about buying on pullbacks, or if I'm going to take breakouts, I'm going to trade them in a completely different manner. So I didn't get my fill. But the reason I wanted to buy here is that, listen, I'm going to target the 103, a good push, or even more, even maybe have a multi-day move on it. But if I'm going to buy between the 101.25 and the 101.50, let's say 101.20 to one of their 30-point zone, just under that low, just around that VWAP or the 20-period moving average, my stop's going to be about 50 cents. And that's a decent stop. If it starts testing down here, it's probably not as bullish as I thought. So that gives me a good risk reward on a bullish trade. If I can get that and give myself a 50-cent risk, and I'm looking for 103, then that's giving me sort of 3 to 1, 4 to 1 on my first targets, and then whatever I'm looking for on my final target. So I'm starting to build, a good risk reward ratio, which to me I have to have in combination with the clues that tell me it's breaking out. So I know I've run a long time with this video, guys, but forgive me. I think this is an important one, and I want to document this for myself. You've got your clues on your daily, your clues on your 15-minute, your clues intraday, how it responds to the key level, and then the final piece of the puzzle, which is the most important piece to me anyway, is generating that trade where you can quantify the risk in a sensible manner. There's no point in buying a breakout and saying I'm going to have a 50-cent stop, which is only basically just giving you in the flag. It's got to be at least wider than that, if not under here, which is where you'd really got to have it. So I'd rather wait for the market to come to me rather than buying that breakout in that scenario.